All right. What is going on, you guys? If you're in the chat, let me know. Is everything working all right? Can you hear me? Go ahead and say hi. I know it's a little bit different than our Discord where I get to see who's actually here. But hope you guys are enjoying your day today. Markets have been kind of frothy lately. We're going to talk about that today. I know right now we just got STAX pulled up. Wanted to start off by giving you guys a little peek at our flow scanner and get an idea of what's going on with today. So as always, we jump in here, click the equals sign, set it up for today, and pretty quickly you can see actually we do have quite a bit of bearishness when it comes down to SPY. Now, usually when we are at all-time highs and making new all-time highs, we see this, but I do believe we might be seeing a bit of a change of character when it comes down to the markets. So I want you guys to be aware of that. I will show you the charts in just a moment as well. Nvidia, a little bit bullish. I do believe we saw them. They got an upgrade by one of the analysts saying that I think their price target's now in like the 300s, which is nuts. QQQ, bearish, but we still got, individual tickers still getting some bullish flow here. AMD, Tesla, Amazon fairly even. We're going to peek over at that as well. Gold, not nearly as bullish as we've been. I think we might see a little bit of pullback. I do believe it hit 4,100 something just yesterday. AIGO, fairly bearish. Intel, we saw some STAX AI prints come in today. I think that's actually a pretty good and solid play that's about to come up. Coinbase, sorry, my dog loves to bark at the people behind us. Coinbase, Broadcom, more gold. Gold looking a little bit bearish. IBIT, which is a Bitcoin ETF. Meta, Google, Bitcoin immersions. Wolf is looking good too, I will say that. Wolf is looking pretty good. Oracle, etc. So, that being said, Camille. Okay. Looking at our STAX flow for today. The one I wanted to point out, we did see Intel coming in pretty strong. We see this unusualness for March next year, $48 strike. So they're buying further up and further up. Now they're aiming for over 40, which is actually something to consider. This is the flow for Intel for today. You see throughout the day, there's only one put here for 250K, but we got 4 mil in calls. Quite a bit of money being spent on this one. All right. Yes. Stacy's got it right. Go ahead, hit the like button for me. I see 19 of you guys watching. Trying to get to my own all-time highs when it comes down to the number of likes on our channel. I've noticed that YouTube doesn't quite push our video out as much unless we do get people to comment, get people to like. So help us out there. We're just trying to help you guys out with showing you what the flow says and getting you guys on the good side of some trades. Give me a quick moment. I'm going to take this and I'm just going to screenshot it and send it over into my Discord channel. I do think Intel is set up for a potential, I would say it has more to do with a potential news where we could see it moving up from there. All right, back to it. If you're looking at Intel, I would say those March ones look real good. You do have a little bit shorter term. If you like a little bit more risk, that November 21st only gives you about a month. But it does seem like $40 is a pretty common strike and that they are aiming for. The unusualness comes from the fact that they're expecting a 33%, about 30% move to the upside when it comes down to aiming for that $48 range. Yeah. Okay. Real quick too. I always like to pull up wave WaveX for you guys as well. It is interesting seeing this today. Even with that big money STAX AI call, they're both under zero. I've pointed this out for you guys before. If at any point you see both the red and the green line below zero, it is a little bit more indeterminate because it shows that they're selling those calls, selling those puts, and they're not necessarily getting into them. But we will keep an eye on this. I still do believe that overall, Intel showing at least the flow for today, this still screams bullish to me. We will probably see a better move on the actual, the actual action is going to look a little bit better once we do get this green line above. So if you do notice that, please let us know in the chat, and we can get some more people into this Intel position. Let's jump into today's charts. This is what I had drawn in terms of what I was expecting for SPY. You might have noticed today, I mean, it kind of went alongside with what I had drawn here. Didn't come all the way back up, but did come back down pretty quickly. So the question here is, though, that, there is a pretty big change of character. First off, we have this big move down, broke us out of the channel. We gap up, come back down, gap back down. Now we have another gap back up. So it's really gone back and forth, back and forth. I will say, though, if we do break down below the 660 range for SPY, I do believe we could probably come back down and retest these lows in the 650 range or so. There's no guarantee we're headed up higher just yet. Keep in mind, this first breakdown was due to Trump tweeting about, China and about how he didn't like their export controls on rare earth metals. He tacoed out of that pretty quickly. He did announce around over here how there was going to be 100% tariffs put in November 1st, but Polymarket and those other betting type of services all say that there's a very small chance that he's actually going to hold on to those through through the month. Then we say, over the weekend, we hear them talking about how, they're still on good terms. They're still going to have the meeting, etc. So then the markets rallied from there going into Monday. Then we hear about soybean export controls, and how we're not going to be purchasing cooking oil was the most recent one as well. So really, guys, the hard part about this market today is the fact that a single tweet can throw us, both up and down. At this point, it seems like there's more bearishness, at least with these tweets, until we do see some sort of trade deal. It really is either bears or bulls could win out on this. It's dependent on a single tweet. I will say that STAX is showing a bit more bearishness as of right now, so that is something to keep in mind, that I would not be surprised to see us with a gap down tomorrow. See, we had a gap up, gap down, gap up. Would not be surprised to see us gap down going into tomorrow. That would be my guess. So I'm still bullish on the long run, where we are stopping our quantitative tightening cycle, and there's a very good chance we should see quantitative easing coming from the Fed very soon. The question is, when will that happen, and will we see the markets dip down even further? I would say there is a risk that we might see this come down here, maybe even test a little bit lower before we head back up. So I would, just be aware that that's where the risk currently is. That's what I would draw in terms of the lower end of the risk before we come back. Now, this could take a little bit longer. I will say Friday, October the 17th is a pretty big expiration. There, it's a monthly expiration, so I think we will see some volatility going into that. The VIX continues to pop, and I will say this does somewhat look like a bull flag pattern. So at the end of the day, there is risk to the upside where we could see another move of the VIX to the higher. Breaking back up over this 22.5 range, we definitely could come back up toward 25 and a little bit more. So I would be careful with that. There's definitely volatility in the markets. There's definitely a risk that is being shown, especially with the movements of the markets. This move down here today, we had a big pop up earlier in the morning, and we dropped 1.5% or so within not even all that. How long was that? That took 2.5 hours before we moved all the way down. So just keep in mind there is risk when it comes down to the markets that we're in right now. All right. Let's pull up Intel real quick. I've had this charted for Intel for a while. I was saying we could come back down, right, from where I drew this. We could chop around, come back down toward the support, which we did see happen during those tariff threats with China, and we've come back up. So basically, if I were to scoot this all the way over, obviously this went higher than I had drawn, but came down, tested this. It's come back up, and it's come and retested the secondary line. So this actually, I would say, isn't a bad area for you to consider getting into that Intel, especially with that Intel big money STAX AI print. I do think that we will see $40 in due time, and then potentially a bit higher if we're able to get up there. The range up here, you got to remember, there's all these people trading up here, so that would probably be the next target to fight through. But that $48 range doesn't seem so implausible at this point. Another thing to keep in mind too is this already has taken this Wyckoff accumulation pattern that we've drawn. So come back up, it is now broken out of that range. And when we have broken out of that range, that is where we start to see some quicker movements to the upside. Another thing to consider too is that on the bigger picture, it is starting to recover when it comes down to coming back up. I will say there is this trend line that is basically what we're now testing. So again, if we break up above that, that's where we see 40, and then potentially 45, 48 would be that next range to be looking for. Go ahead, by the way, if you guys have any tickers you want me to go over, go ahead, drop them in the chat. More than happy to get them onto our list of what we need to go look over today. I know there are a lot of people right now. Tomorrow is the big Snapchat event. That's what I'm waiting on. I'm in a pretty decent sized position for Snapchat. Flow's kind of been, it's been whatever. Not too much has gone on this last week. I feel like most people are already positioned in it, waiting for it. The premiums on this are fairly small, you might imagine. 120K to, was it this 176K to about 500K of puts. So price has just been hovering around that high $7 to low $8 range. So I think we're just gonna, Snap's gonna move tomorrow with the event that they have. In terms of the chart, nothing's changed on the chart. Snap is giving us a couple of different potential entries, or at this point, it has not broken back down below this 750 range. We do continue to see buying pressure, especially this was the range I had drawn from before, is that very good chance we're just going to see more buying there. I will also point out too, there is a possibility we could see Snapchat drop a bit further, but down here, this low, $7 and $7.25 or so, there's a lot of activity here. So if it were to drop back down there, I wouldn't necessarily be too worried. If it does come down lower, it's very good possibility that we'll see it push up higher from there. Okay. Yeah, this would probably be the low. Yeah, there is a put wall at 8 and all that, and we also, with volume, you can see $7.34. You'll definitely see additional buying come back in. There is a little bit of a gap down here in volume where you could see price move fairly quickly between 760 down to about 735. But I like where we're at. I think we are set up. You know, the thing that is, especially with the markets, you don't want everybody on the same side. So if everybody was all bullish at once, that would actually make me a little bit more worried about this position that we're in. There's still a lot of doubters out there, and you know, I think it's fair for them to be doubtful because of Snapchat's past with their earnings, with them, you know, having trouble being smart with the way that they're making money. But they did make some pretty big pivots just this last quarter in order to bring in money, and I do believe that this event combined with their upcoming earnings could be two solid catalysts that see this next move up. Next one, let's talk about Wolf. Wolf is still seeing some continued strength. As you can see, still a lot of buying coming in the last couple days. About 2.5 mil to about half a mil, 600K of puts. So definitely more bullish than bearish on this at this point with Wolf. I'm gonna screenshot this for the chat as well. Let me also share this with you guys. So there's a very important flow of I came across this on Twitter. I thought it was extremely important for us to share. If you guys kind of think about where all the AI hype and where a lot of the money has been flowing into recently, you got NBIS, IREN, CIFR. These ones have run like crazy recently. Same with OKLO, OKLO, VST, CCJ, you know, the energy behind the AI. And then recently, EOSE's flown up like crazy, FLNC. I haven't seen as much about NEE, but it is part of it as well. And then Path, RRSCRV. So there are additional names alongside with this. I do believe Wolf is one of them as well. So when we go and take a look over at these names, most of them have made this extreme run up over the course of the last few months. So Wolf, I do believe, should be making more highs here, breaking up above that $16 range, and it should very possibly come back to retest this big area right here where we saw a quick move down. So anywhere between, I would say, 17 to 26 is still possible for this. Now, keep in mind, markets do not, and you know, price does not move in a straight line. So keep that in mind. There could very likely chop around as it moves up. But I do think Wolf is a solid play for the long run. I keep bringing this up. We were in Wolf for the November contracts when we started our 1K challenge. And while we did get a good return on it, those same contracts are now at about like 8 or 9x, so 8 or 900% return on those if we had held on. So just crazy to see when you are in some sort of accumulation range. If you do buy enough time and you are patient with your contracts, you know what type of return you can end up getting. All right, let's go through the ones you guys have. Google is looking pretty strong right here. Very much a bull flag type of pattern that we see here, and a strong move to the upside of it. So if it can hold this and break back above this 256, I think we see new all-time highs for this pretty quickly. Flow's looking strong today, especially if I filter for the buys. Right, very, very strong for Google as of today. And you also want to remember too, consider this as well, where if you compare today's move, right, this is something always to consider. Compare today's move and go pull up SPY right next to it. Okay. I wish there was a button I could just press to link the two together. Okay, so from open, right? Google's actually, I mean, while you can understand, yeah, Google did have a sell-off down here alongside with it. Relative to it, though, it's bounced back harder than what SPY's done. SPY is still back in this area while Google pushed back a little bit higher. So it does show a little bit of relative strength when it comes down to the movement that Google's made. And also, especially right now, when you do consider, okay, yes, the markets are getting a little bit more fearful. We are seeing some more volatility. You know, VIX is starting to spike. We're back up over 20, everything like that. What you do want to consider here is, you know, what tickers are showing that strength, and what tickers in terms of those of the company are still strong in terms of their balance sheets, in terms of what they're able to, you know, bring in terms of revenue and things like that. The one I keep seeing right now that everybody is a little bit more fearful on is this Oklo one. Oklo is one of those, it's part of the energy of 40 days, so a month and a half. Oklo, at the end of the day, still doesn't make money. They're still negative on their balance sheet and are, you know, still got to figure that side of their company out. They are getting deals with other companies, Nvidia, things like that, but at the end of the day, they still have to figure out how they're going to bring in that revenue. So there could be more potential weakness for names like this. The hardest part about it is due to the fact that with this AI hype that we have, it can still run up irrationally at this point before it does make that correction. But when they do sell off, I do think these are going to sell off extremely, extremely hard. All right. What else do you want to see? Google Wolf Snap, OSCR. The theory behind OSCR, Oscar, is the fact that if there is any sort of Affordable Care Act subsidy, this is going to be the big benefactor of it. There are some big money premiums coming in for March of next year. This is giving it some time, $2.45 for those contracts. And so this has to come. This very much is going to come down to whether or not Congress ends up signing those deals and figuring out not only the budget side of things, but also getting that Affordable Care Act figured out, so that you know there's a lot of talk about how premiums for everybody are going to start to go up if they don't figure something out. President Trump also did talk about signing something separate from that bill. We'll see, but it does look, you know, the people that are going to get hurt the most are always the little people. You and I, you know, I saw something about how a family of 5 or family of 4 could very quickly see their premiums not only double but even triple if the Affordable Care Act subsidies do not get renewed. So if you're bullish on this, I'd say you got to see it come back up over this 22.77. That's another big resistance point. Then we could probably see back up toward 22. So probably a little bit of a bounce around. Maybe even come back down. Yeah. One of the things I will point out about this too is big money, or you know, you can understand our democracy / oligarchy. Oligarchy basically means that our systems are basically controlled by the big corporations that have money. Do they want the Affordable Care Act to be passed? Do they want that type of subsidy? Of course they do. It's money in their pocket. It maintains the amount of subscribers that they have, because the idea here, especially with healthcare, is that, let's just say, for example, they do not sign this ACA subsidy that helps, you know, keep premiums lower for the everyday American. Well, it creates this little bit of a death spiral when it comes down to insurance. Because what will end up happening is that there are going to be people, especially younger people, who, number one, don't want to pay for that type of healthcare or don't necessarily want to pay the high premiums for it, or they don't have the budget for it. They're just going to say, well, you know what, I'm going to have to cut my insurance. What that ends up doing is it leaves the most vulnerable population, the people that are sick, the people that can't go without that insurance because they need to be able to afford medications and care that, that they're currently in. As a result, what's going to happen with the insurance companies is they're going to not only already have higher premiums for everybody, now they're going to be left with the most vulnerable population, and that most vulnerable population will now end up being charged even higher premiums, which is going to create a cycle which only inflates premiums further and further. And as much as it does hurt all of us, it hurts the vulnerable population. The people that need insurance aren't going to be able to get it. It's going to affect the bottom line of these companies. So you can, I would just say my opinion is the fact that some sort of deal will be made, whether it's as big as it was before or not. When it does get announced, or if it does get announced, we should see some pump in names like Oscar Health. Okay, so somebody mentioned to me, try not to get too political about things during this. I understand we're all on, there's people, there's Democrats in here, there's the Republicans in here, there's some people that don't really care. I try to stay as objective as possible. At the end of the day, I just believe the fact that, everything's controlled by money, especially if you're able to follow the money and try to understand the flow of money when it comes down to these. It definitely can help you make better decisions as to what positions to potentially get into. One of the big ones that is an example of that is K-View. The whole Tylenol situation with, Tylenol causing autism in babies when the mother is pregnant and all that. The stock has dropped like crazy because of all of that. And if you follow the money, Dr. Oz, who is on the board and a part of this administration, he's on the board of one of the competitors to KView, which is doing better because of all this announcement. So keep in mind, a lot of times, a lot of this is going to be influenced by the flow of money. And if you can track where it's going, you can definitely find ways to profit alongside with it. Okay? I've always considered the markets are a place where it's kind of like a movie. You and I are not going to be able to necessarily interact with it in a way to influence what's going to happen with price. We're just spectators, right? So K-Web and grab K-Web. So Chinese names are going to get a little bit of pushback right now, especially just due to the fact that all the language around these these tariffs and the trade war. We're getting into the nitty gritty of that right now. There is kind of this wedge that's forming. I do believe we'll see a breakout pretty soon. I'm still bullish for China names in the long run. They're still going to do stuff to accelerate and to put more money back into their systems. I would also say that with the big push down that we just recently saw, there's a fairly good chance that we'll see some sort of recovery. But this is also, just like I said, one of those things where what the president ends up tweeting could tank this. What the president tweets, if there is some sort of trade agreement, could make this rally very quickly. So it's one of those things where uncertainty is what brings the markets down. And when we do find certainty, we will start to see that rally. So that's the hardest part about right now. I do believe that the administration does not want to see these markets suffer right now. They do have, they've got big money in their pocket. They're trying to make more money as well. So if we do see another sell-off or we do see moves down, be ready and keep an eye on what STAX has to say, because I do believe we will see buyers step in fairly quickly in many cases. Go take a look at Grab. Grab's really just been in this range. I drew this out a bit ago, where I think we're gonna come down to this range, this 580 range or so. Worst case, come down to this other level of support. Look at that with the tariff, 100% tariffs on China and all that. We saw this drop down to 550, but it's recovered from there at this point. So, I think we see a little more chop around, and we start to see this rounding motion back up to the upside. Let's take a quick peek at STAX. Keep in mind, these grab positions are aiming for February, so they do have quite a bit of time. They're only aiming for $8, which is a 20-something% move from where we're at. And we also have these are interesting to see. January 2027, $10 strike. So you might want to consider that one if you're willing to hold on to these. What my suggestion would probably be is, if you have a portfolio that you just don't log into that often and is more of like a retirement type of account, maybe go grab 10 of these, right? $700. Grab 20 of these, $1,400, and hold on to these, and don't look at this position until probably mid 2026 or something like that. I do believe grab is poised for a run up, especially due to the fact that if you look at it on the bigger picture, it has gone through the accumulation phase, and once we see this run up, we'll see it past $8 fairly quickly. So another one of those ones that has this nice rounding bottom, with it going through a consolidation phase right above the range and continuing to break up, and we don't see a ton of selling off from that position, so we don't necessarily see distribution happening just yet. And I've had some friends on Instagram and things like that going to visit overseas, and a lot of them end up using grab because it basically is like the Uber Eats of China, or of Asia at this point. So something to consider, right? If you could get into Uber back when it was only $6 or $7, you'd be sitting pretty right now. TSM. Little thing too. I mean, I am Taiwanese. Definitely have friends and their parents, and know people who their dads work at TSM and have done fairly well for themselves. The thing about TSM here is just the fact that a lot of times you have to understand, with the semiconductor industry, I would not be surprised to see them beat their earnings and beat it pretty hard. The hard part about that is how much of that is necessarily already priced into it. They're going to continue to make deals. They are responsible for, I believe, about like 90% of all semiconductor chips that are being made. And then they do have a pretty strong hold on all of that at this point. Give me 1 second. If my audio is choppy for you guys, go ahead and try to, I would say, refresh. Sometimes it's just due to the stream. It looks like I do have a few drop frames here and there on my side, but it's going fairly smooth for me. So unless all of you guys are hearing choppiness on my audio, go ahead and say something if you do. I was just saying, TSM's run up pretty hard. If they come only in line, or for some odd reason they end up missing on their earnings, we'll definitely see it come back down. But this one, it's hard to predict. If you're still believing in all of this, AI hype and semiconductor chips and money flowing in, I keep calling it the AI circle jerk, where money is just kind of being passed around to each other. This definitely could break up and make new all-time highs, but with earnings, I would actually not be surprised to see this spike up during earnings and probably come back down and just stay within this 280 to 300 range is kind of what I would say very possibly could happen. So I would say earnings see a spike up, come back into this range, and maybe just see some chop around until next week after earnings. We'll probably see buyers step on in. Okay, so just be aware. There's a good possibility we might see some manipulation, is what I'm saying. That's not looking very good for TSM. Short-term stuff, we see some calls sold, so that, I mean, this really does basically hint to me what I'm saying. Okay, this $6 million of calls sold right here. Yeah, I think we stay under 300, to be honest. I think we stay under 300. Real quick, too. Let's just pull up earnings. It does like they report before market open tomorrow. If STAX is any indicator of what's about to happen, I would just say I kind of think it's going to chop around, to be honest. I think we'll see like I said, a spike up and then come right back down, stay under 300 by open. ARM. Man, I've been saying I need to make sure that I start recording my Discord live streams because I was like a fortune teller on this one. ARM, I was saying we very possibly will see higher for this in due time. It's they've been making deals, and the deal I was expecting was that due to the fact that all the bigger companies, all the bigger semiconductor chip companies are making these deals with OpenAI. OpenAI is, you know, getting into everybody's business, and money is really getting passed around with it. I basically said during one of our live streams that if we were to see this break up above, we'll definitely see a run up. And ARM is poised to be one of the next companies that ends up getting some sort of deal with, you know, part of that, what I call the AI circle jerk. And the very next day, we actually saw that they got a deal with OpenAI. Was it OpenAI? Yeah, OpenAI, with their chip partnership. So ARM is going to help design some stuff for them. Now, we saw that spike up, but it really didn't hold throughout the day, and it's come right back down. But I will say it's still fairly bullish, especially with all of that news. There is a little risk that we could come back down toward the 150 level or so before heading up higher. But basically, we saw it spike up, come back down. As long as this 170 range holds as support, we should be heading up higher, though. So long term, long run, I wouldn't be surprised to see ARM do fairly well. But when it finally breaks out is the question. It already did test all-time highs with that news, and it just didn't quite hold. So it just means that they're not ready for it just yet. We also did see a lot of ARM buying. Yeah, if you take a look at this still. Yeah, we got some big money puts here and there, a little bit of unusualness. But this right here was basically one of the signals that some news came in on the 13th, and then the pop came on the 14th. So still pretty bullish on it overall. Give me 1 second. All right. Real quick, let's see what other earnings are worth looking at here. I mean, okay, so I talked about this during our live stream on our Discord yesterday. Bank earnings already came out pretty strong. Now, what you have to be aware of and be careful with that there is the fact that now that now that a lot of the bigger banks already reported, that's now going to be priced in for the rest of them, and so you have to be careful where, it basically raises certain expectations, and now if certain, the rest of the banks that do report, if they do not meet those expectations or they do not end up beating those expectations that are now in place, then we're going to see selling off on those tickers. So I would just be careful with any additional bank earnings. We do see Ally Bank coming up as well, and a couple of other ones tomorrow. I'm not playing any of them in particular. I'm just probably going to watch what happens with Taiwan Semiconductor for tomorrow. That's basically the big one for this week that we're really focused on. All right. If we see anything else here. SPY is still so. One of the things I will point out, especially with charting, sometimes is there oftentimes are going to be moments where your biases, right? You're looking confirmation bias is a hell of a drug when it comes to these markets. Like I said, I'm still kind of expecting this to go up higher, but there is the risk that we're going to see another tweet at market close or tomorrow where we see the markets tank from it. The thing I will point out though, especially for today, is this long wick that we see from today's action coming down, wicking back up. This is on the hourly chart. Obviously, if I go 2 hour, still same idea, big wick there. 4 hour, same idea just as well. So what that's really saying is that price is not wanting to stay down below these levels at this point. But again, one bad tweet from our commander-in-chief could basically push this back down. All right. It does have a little bit of, like I said, a little bit of a bear flag look to it. So seeing it break down wouldn't necessarily surprise me. It is one of those indeterminate situations at this point. SPY, though, I will say, something's going on with our spot price. It's very, very jaggedy on this. We do see a lot of calls coming in. That's the thing. So they, if it was one of those things where they are still positioning for the upside, I'm not surprised about it. And this is just for today on the bigger scale of things. Overall, though, for the week, SPY is still looking fairly, has that bearish look to it. And just like I said, if I go ahead and I just set it up for today, we still see 62 million puts on this to the 9 million calls. All right, so keep that in mind. Let me share this with you guys too. What I have here, if you go to, it's called finviz.com, financialvisualizations.com, finviz, and you go in here, you click on the right side over here, and this is a heat map. So what you can see is, color coded as well. Financial, some of the bigger banks are doing okay. Communication services, Google and Meta doing all right, but the rest of the Communication services are just okay. You know, nothing down a little bit for Netflix and telecom services, AT&T, Verizon, etc. Um, Semiconductors, AMD's up 9%, Broadcom's up 2.5%, Intel's up 5%. Right, semiconductors and this, their equipment and everything. Applied Materials, LRCX, CLAC or KLAC. These are all up today as well. So you can kind of get an idea where the money is flowing when it comes down to the markets. It's down or kind of flat, really. Utilities are all up in this range. And you also can understand this entire situation is also the size of their squares are relative to how much of the S&P 500 that they occupy. So, something nice to have. So I can hit on share the map. I can download or copy it, right click on it and copy it as well, and post it for you guys too. But back to STAX. Let's see what we see in the flow. There are additional tickers you guys want me to go over before market close, please let me know. Let's peek over at RGTI. Yeah, this one's still strong. Still a lot of volume coming in, so I don't think this move's done. I think we should test 60 again. What a move, man. What a move. 275%. If you just went with stock, right? If you're in options for this, obviously it's a big multiplier. Yeah, coming back down. I know some people are in this position. This actually would be a good spot to potentially add to this or get into it for, I believe it was either February or March for next year. We saw some unusual calls for these come in. I hope you guys enjoyed my sacrifice on American Airlines. I basically sold right before it popped. This one was just weighing heavy on my mind, and in terms of just that mental space. I've been talking to you guys about how any sort of actions in our life take energy. You think energy points. Think if you're a Diablo player, it takes mana. The way that my wife and I characterize it is it takes spoons. Every day you have a certain number of energy points, which are considered spoons that you use in order to make decisions for your day. All big decisions, and sometimes the things that you maybe don't necessarily like to do, take spoons. So making decisions in what you're doing for the markets definitely takes energy points, takes spoons. And at the end of the day, this is one of the ones where after this pop and it came back down, I just did not want to hold on to this because my expiration is coming up to where it's within the month. I really don't like having to hold on to these positions for too long. That's why I buy the longer term positions for us. And again, this one did end up popping. Would have been probably, if not even by now. I'll even double check, see where it's at right now. The position that we were in. I sold it at 17. It's at 32.33 now. So probably would be a little more even on that at this point. And like I said, technicals on it. Like the news that keeps coming in wasn't always the greatest for it, but I think at the end of the day, this could be its run up toward its earnings coming in. So I do think we should still see a bit of a pop on this. TTD looks like it's found some support back at where we saw the pop. So like we said here, I wouldn't be surprised to see us come back up. I want to see it break into this gap. And I have till January on these ones, so not too worried about it, just holding on for it. I'm going to set this alert for Unity. If Unity breaks down below this 34 level, I'm going to start looking into potentially getting into those longer term calls for this. I think Unity is set up to go back up past 48, up past 50 pretty soon. And these moves should be pretty quick once it does happen. This is another one of those larger accumulation phases. And just like I was showing you with something like EOSE and Wolf, once we break up above these and we go up into this upper part of the range, we could make some very big moves up to the upside. I saw some people targeting this could even go up towards 70 or 80. Question is always just going to be, when will that finally happen? You'll see 21 of you guys in here watching. If you can do me a favor, go hit that thumbs up like button for me. Let YouTube know that you guys are enjoying these live streams that we do. Again, we'll always be here on Wednesdays as market closes. We're getting into more of earnings season again, so we'll probably see, you'll see us back in here a little bit more. Ooh, some puts for Snapchat. For January. They might be thinking there's going to be something bad that happens with the spectacles event, so we'll see. I'm still bullish on it. I'm not getting out of my position. We're going to have to hold on through tomorrow, see what happens. Lyft also looks pretty good too. It's holding on to 20. We did see that big put. I think as soon as we hear, we're probably going to hear some more news about this pretty soon, but it's holding on to the top side of this downtrend, or this little range that we have. So if we can keep this range and potentially pop up back toward about 21.5, I think we should see this headed back up toward this gap pretty soon. Keep in mind, a couple of these are also based. Oh, I didn't show you guys. That's my fault. There we go. This is Lyft, by the way. Lyft, again, holding this top line of here, still above it. I think we could still see a little bit more chop around. We do have through next year for this position, so this is one of the ones where I'm going to be holding on for a little bit longer term. But I do believe we should probably see back into this gap pretty soon. There are a couple of different catalysts along with it, obviously earnings and things like that, but I think the one thing that is going to push a lot of asset prices up higher, actually two things. Number one, we are very possibly going to be lowering our interest rates in the next month with the next Fed meeting. It sounds like with what Jerome Powell said, is not only are they very possibly going to lower those interest rates because the job market is struggling, so that is going to be one of the catalysts that kind of pushes and forces money to be moved around a little bit more. But on the other side is the quantitative tightening has ended, which generally leads into quantitative easing. So we're going to start to see money flow back into everything and back into the markets. In doing so, that, just like what we saw during COVID, just like what we saw during that money printer, is that we see asset prices start to go higher. All right. Just a few more minutes till market close. Let's see how the market. We're holding six. So 660 is basically the number that I believe is kind of the big battleground. Basically, this blue line, 661 is where this one's drawn, down to about 659. Above it, we're still bullish. Below it, we're going to start looking more bearish. Today's drop was a little bit concerning. I will admit that. That was a very quick move down. But this could potentially even be a little bit of a shakeout before we head back up. You know, we're gonna have to take some time to see how it plays out. The other side of it was too, we saw this gap up from over the weekend into Monday, and that gap got filled very next day. So you see that filled up perfectly. So this gap right here got filled, and we are, you know, we're still in the middle of it. We filled down, come back, bounced up on the top side of it. So we'll see what happens. Right now, STAX is saying that there's a little bit more bullishness with wave X flow showing. And then on the other hand of it, though, the flow scanner is showing that there are a lot of puts that have been taken too. So a lot of hedging going on. I think until we hear some more certainty about what's about to happen with the trade, you know, basically we're in a trade war right now. Until we can find some certainty with it, I do believe this is just kind of what we will be experiencing. It does definitely look like a bear flag though, realistically. But zoom out, pull out here, take a look at what's going on. A lot of people call this a change of character, but realistically, we're still in this range. I know it's a little messy with the way I've drawn. We've come back into this support. So we came down. This could be a test, and if that test does reject and we come back down, then I would expect more bearishness. China's cooking oil market. All right. Going into market close, we'll see 665 back up into it. Ooh, big bunch of volume heading into the close. My prediction for this week really was that after that big candle, that huge move down, we were just going to see an inside week, meaning that we're just going to see price chop around inside that big candle, which is exactly what we're doing right now. Big old candle, we've just stayed inside of it. So till we break up to the upside or to the downside, we could spend some time in here, at least through this week. It's basically a big battleground, back and forth at this point. All right. Check our Discord. Hims released some sort of something with the hers side, menopause expansion, boost their customer base. I was thinking we might see it break down more. This still has to break up above this channel for it to continue higher. Good volume there. Testing the upper range of this, so we'll see what happens. If it can hold up here, then what the next step for Hims, I think we would see it come down to this range. That would be the bullish scenario for it. I'm still a little bit bearish on it, just due to the way that it moved down so hard with these candles. Yeah, that volume's still fairly small, so we'll see. Maybe they've got something up their sleeve. Oh, take over at AMD. New all-time? Not quite. Almost new all-time highs. That's a strong day for AMD. Strong day. So, my suggestion right now, if you're not already on Twitter, get a Twitter account and kind of keep an eye as to, I still expect there's going to be more announcements, more back and forth with a lot of these names. Now, there is the worry that what they're basically doing, it's like circular funding, where they're basically, the example is basically it's like if me and my best friend go ahead and we start two businesses. I have a hole digging business and he has a hole filling business. I give him $1,000 to dig the hole, right? And then he gives me $1,000 to fill the hole. We don't even do anything with the hole. Nobody touches any equipment. But we both show that we made $1,000. So that's kind of what's been happening with the entire open AI circular, funding going back and forth between everybody. There is a big risk here with the fact that they're going to eventually realize that there isn't necessarily, or how do I say this? The valuations that they've created are extremely high. And as time goes on, so for example, they're buying chips from AMD, they're buying chips from NVIDIA. They're funding each other to do this and to value their chips at such a high price as well. But as time goes on, supply for those chips starts to grow. More competitors step into the space. China's doing their best to develop new chips as well. So eventually there is going to be a possibility where not only do these chips end up losing their value over time, they also need to be replaced because a lot of these chips are going to be running at 100% capacity, all the time. So, what is the longevity of these chips? Are they going to last for 3, 5, 10 years at the most? I don't even think they're going to last 10 years, right? It's basically like trying to run your computer, playing video games and streaming the entire time and never turning it off. It eventually takes a toll on these chips, and they're very delicate chips too. They're extremely, the components of them are extremely small. So if something does go wrong with them, they do need to be replaced. Are they going to fund them more? Are they going to give them more chips for free, or say that we're going to hand each other another $100 billion to do so? So the question is, where's that value truly coming from? And that is where the risk of a lot of this is coming. There is a possibility that, there is this AI bubble that's being built, that's growing. I was talking about this in our Discord live stream just yesterday, where any new technology that is built very often creates some sort of bubble because everybody wants to get in on it before the infrastructure and before the systems are fully operational, and before that the revenue is truly even there. And that's kind of where we're at. OpenAI makes some money. They're charging me $20 a month for me to use ChatGPT, but it's not going to be nearly as much as the valuations that they are showing at this point. So there is risk if we do see, if we see big money getting into puts and we see them buying heavily against the market. STAX is going to be able to show you. So just keep an eye out for those situations. As of right now, market's going to continue to be irrational and continue to go up at this point, especially with money flowing back into the markets with quantitative easing right around the corner. That, and alongside with our interest rates potentially going down. Yeah, 13 billion versus 1.5 trillion being spent. Yep. It's the number, there's very large gaps between the numbers of what their valuations are versus what the actual income and revenue actually is. So yeah, speculation for the long run, but until those numbers are actually being shown, it is, that gap equates into some sort of bubble that needs to be dealt with. And a big part, so when you and I think about AI, like a lot of us, what comes to mind are like robots doing work for you, and basically like um, the computer being a brain that thinks for itself. And we're not exactly quite. Oh, sorry, Max. How long have you been waiting in there? Um, it's just we'll make our chat a little bit bigger so you guys can see us. Sorry, Max. My bad on
No, you're all good. I was just, I know you were in the middle of talking. That's why I didn't really interrupt or anything. But as you know, I have some very strong opinions on this topic,
Yeah.
considering I just put out a video on that we're basically in an AI bubble, but no one wants to admit it.
Mm-hmm.
But I also think the big issue is people don't really understand what an actual bubble is versus like new technology having to eventually be justified. So we're not in an AI bubble. We're more in an AI justification phase because, like I said in the chat, if if you were on the board of directors and your company comes to you and goes and you go, hey, how much revenue are we expecting to do this year? And you said $13 billion. You would, as an investor, as a board member, would be ecstatic over that, right? And then you go, so what is our capex looking like to get these factories up and running? And I go, well, about 1.5 trillion. The first thing in your head is going to be like, how are we going to, so it's going to take us 10 years to potentially 11 years to pay this off essentially. Because 1.3 trillion, by the way, is the conservative estimate that they're giving. That doesn't include inflation on materials, costs of building, whatever the case might be. So it's a it's more of a justification period. We actually did like a 3 hour late night stream yesterday that went from like 9:30 to midnight where we talked about everything from like bonds to, and then we kind of broke down the video I made going over this. And the big thing is you can't we're past the point of just saying AI and having it be enough to justify spending money. You have to now say AI this, because here's unpopular opinion, we don't even have real AI. None of this is real AI, by the way. These are just large language models
Yep.
trained on mass amounts of data sets and are able to come to logical conclusions based on those data sets. That's why if you ever ask for Chat GPT what it thinks about something moving forward, it will never give a true answer. It will always say, well, based on historical patterns, which is great, but that's not AI. AI is going to be able to like speed up the process of drug discoveries, right? It's going to be able to look and find economic patterns of what's going to happen based on probabilities from the past versus you having to prompt it. So it's all about it being able to actually like push the envelope forward in terms of innovation. Right now, we're just in an innovation bubble, meaning that's why you're seeing this big circle jerk happen because everybody's just like, well, if we all just like grab onto each other, then we're innovating. It's like, no, you're not. You're just stimulating each other. Like you're not innovating anything. Like you're just giving all each other handy J's under the lunch table right now. So really until this quantum thing, which now quantum, we're seeing what happened with AI in the early days. If you go back to about 2020, yep, about 2020 to 2021, we're seeing a lot of the same patterns with these quantum computer companies. And that's like Rigetti is pretty much the NVIDIA of quantum right now, in my opinion, because they're the first to market in a sense. And in quantum, because it's such a big, it's going to be such an expensive venture, you're looking for acqui-hires. You're looking for companies that can get acquired for their IP potentially, that can be turned into a sexy machine that becomes an enterprise grade product for the enterprise markets. So really, you guys just need to understand it because capex is increasing so much. All we're doing is setting ourselves up for a bigger cliff to fall off of. There's a reason that Jamie Dimon just came out and said we are in an AI bubble. It's just no one's willing to talk about it because right now none of this trades on fundamentals. It's all galaxy gas and hopium, basically.
Yep. Very much agreed. Right. A lot of these valuations could make sense down the line, but as of right now, it's all based upon what could, what could happen. And just like Max said, the AI that we use nowadays is really just large language models. It's really not thinking for itself at this point. It's still, an algorithmic setup versus a brain thinking on its own. We're not quite at that just yet, and that is going to be something where quantum is going to be able to help. But full implementation of quantum is still 5-10 years away from being a reality for the everyday consumer. And
Yep.
at this point, you know it's going to happen in our generation, but the markets and where price is going to go, first off, it can be as irrational as it wants to be for now. But Max has said, when this cliff that we come and fall down off of it's going to come down very quickly. It's the stairs on the way up, like you can see here with Rigetti. It's gonna slowly move its way on up. But when it does come down, it's gonna come down hard. And there's already people that are starting to bet against it. There's some bears out there. The big example I would use is Oklo. It just keeps reminding me of how in the Wolf of Wall Street, when he starts selling penny stocks, and he talks about how there's this aviation company that is the next new big thing, and it shows you how it's basically a shack, that nobody is even working out of, or it's just somebody's garage. And yes, while down the line, Apple started in a garage, etc. But at the end of the day, those companies are being hyped up and people are buying into it. But for example, Oklo doesn't make money at this point. Their systems still need to figure out how to, how to be that integral part of the system. And they haven't really necessarily implemented it at this point. It's all just mostly theory so far. So um, there are it is fairly worrisome. It's one of those things where big money is going to make their money off of it. The 401ks, when this crash does finally come, the 401ks and people's retirements are the ones that are going to suffer the most. Unfortunately, it is part of what the cycle does and what it does to to the masses. So
Well, one thing we actually figured out. So last night, one of the things we looked at was the stock market crash of 1929, and it's eerily we are in very eerily familiar territory right now. Like, I think right now 80% of traders trade on margin. So it's essentially like 80% of the stuff we're seeing being traded on options isn't even cash, it's a loan in a sense. Back in that day, 90% was on margin. So there's a lot of eerie similarities between what's going on between 1929 and kind of what's going on right now. So it's a pretty interesting correlation that we were able to draw between like what's going on with the market today and what our market looked like essentially back in the 20s. And it's almost the only difference is we have more safeguards in place, like the FDIC and all this other stuff. We have flash crash insurance, basically, where trading stops if it's a level one for 15 minutes, it stops for 30 minutes, level two. And if it's level three, it basically stops all day. So it's a little different, but we are in very like similar scary territory, basically.
yep. I was trying to get this to. I don't know why it's not. I don't know where it posted it. All the way at the bottom. There we
We crushed SPY today. We caught SPY at a 0.15 average, and those contracts went to 250 a contract. And then we found IWM, got stopped out, and then re-entered and took that for 500%.
Yeah, if you guys haven't joined Max on his streams, he's on here every day. Make sure you guys go join him on Twitch. There's money to be made.
And we still take our long positions, like EQX, that just hit 400% today. MUX, we're sitting at 1500%. Is there anything else that we're in? And then the last thing that we're in is just Neo puts, but those aren't due till 2026. And then TOC $4 calls due April 17th. So everything else I'm in, I have like a year until it has. Oh, a BBAI $10 calls for March 20th. But you could have taken profit, by the way. Those hit 32%. So you could have taken some scales off and then looked for a re-entry because they're only up 4% currently from our entry point.
What's your take on SPY for the upcoming weeks?
So with SPY, let me see if I can pull our chart up. Because we charted this last night as well.
Like that drop that came today was
It
it was quick.
Yeah, it's a demand. So what's basically happening is like, so the way I chart SPY out is I look at the 4-hour and basically just find like where are all the gaps at. And then if it's below price, that's a level of support. If it's above price, then that's where we find resistance. And then we go into the hour, find the lowest point on our 4-hour support, and then draw a trend line, and then basically make sure that it stays above that 1-hour trend, because that means we can expect some more upward movement. And then where we see a trend line cross with support, that's where we essentially can see a death cross. So it's like once price gets to that level, you can assume that it's going to finally decide to make a direction or pick its move. Today, basically what happened is we hit a sell zone, like a previous day sell zone. So if you look where SPY sold off even on the hour chart, if our sell-off point today is the same sell-off point that we saw on Friday of last week, basically. So those candles are in pretty similar spots. So basically what I did was, if you look at that candle on the hour from Friday, that big red, the second big red one, basically one thing you'll notice is that until you see Monday, what is one thing you see? No real price discovery within that range, right? Every time we've seen SPY move up higher, we see a bunch of clusters where we see these aggressive moves up and down. So with SPY and IWM and all these indexes right now, they're going through a price discovery phase like any normal common stock would. And the main reason for that is because retail traders are trading the shit out of zero date to expiration contracts, which also messes with the algo manipulation of these charts as well. So with SPY today, it's just basically rejecting from the same zones that it has been getting beaten back down off of, which is between about 670 and 672. So it really needs to do price discovery. I even think it has areas to discover all the way down to 648, because there are some gaps that need to be filled there, and there does need to be some price discovery in those zones. So before we see anything, I think, above 670, I would say even 675, we will most surely see 650 prior to that move. So right now, what you need to do is, it's essentially a scalper's market. If you want to play into the end of the day and you're confident in a direction, you buy one day out, or you buy into the end of the week. But trying to swing stuff overnight where you have to have it cashed the next day, I mean, if you feel like gambling, that there's no safer way and no better payoff. But if you want to get maximum exposure, not get cut off by like Robinhood's 30-minute rule or whatever, buy a day out. But what we've been doing is pretty much just playing the opening range break. If we break above, then I find the sell zone, and then it's basically, if we reject off that sell zone, we go short into the opening range, the bottom of our opening range. But I definitely think with SPY, it's just tricky because like today Trump threatened to do 500% tariffs on China because they're buying Russian oil. Like,
Oh my god.
so it's just that's why I'm like I could like chart spy all day, but I can't chart Donald Trump's truths from Truth Social that
That's
he
exactly what I said. I was like, there, you know, the macro says that with lower rates and with QE coming back in, we should see higher prices in time. But it's hard to tell where price is going to go in the short term
Yep.
because a single tweet can tank the market and a single tweet can, make us rally into all-time highs right now.
And
So,
one thing people can use, by the way, is Bitcoin. So
yeah.
you can watch what Bitcoin's doing. Like if it's rejecting levels hard or it's starting to sell off, you can assume SPY is going to follow that same pattern, just a little delayed. So whatever you see Bitcoin do, and you're unsure about what is going on, then you can always go look at what Bitcoin's doing because SPY will most likely follow that within about an hour or like within the hour basically. So that's what we've been that's kind of the meta we've been using to play on these things is we look for aggressive run-ups where there's real no price discovery and then um, we just wait for price to be discovered within our levels. And honestly, like the levels never really. It's we basically just draw Fibonacci charts, but like raw. Like there's no, we don't actually use the fib. We just use like support resistance levels, and then anything above is the demand. Anything below is supply.
Yep. Oh, markets are all over the place right now.
I don't like you can't. I was just like, it's not even technical anymore at this point. It's
Yeah.
all just like vibes driven. Like we're vibe trading it's like vibe coding at this point.
Well, there's a meme that shows like trading in the past where there's technical analysis and people are drawing lines and charts, and then trading today is just listening to what Twitter and Truth Social are moving the markets. So it
I will
is.
say one thing that's interesting in today's flow though is they dumped $670 million in the dark pools into BBEU. And that's a Europe it's like a European, I don't even know what it is. But that was like that was two of our back-to-back biggest dark pool prints today.
Hmm. Interesting.
And it looks like the overall sentiment today was fear driven though. It's going to be over in our dark pool. Yeah, our two top prints for today
Yeah, I
were these
saw that.
BEU prints. And that's where I was just like, wow. And by the way, those are indicators. Like when we saw that aggressive drop after SPY's temper tantrum on China, the day before, guess what? Guess what the top thing that was bought in the dark pools? It was bonds. Like people went on a bond buying spree literally the day before Trump crashed the S&P 500 with his China remark. So that the dark pools are also another great place to look. If you see people start to cycle into bonds and safe havens, you can most likely assume that we're going to see some more pullback within the indexes. And when we see more indexes being bought in the dark pool, we can see some continued upward movement. So again, because we are in such a non-technical area of the market right now, um, we need to leverage things like dark pools, volume profiles, understand where the pivot points are, understand where the flip zones are within the chart, because even if we do get bad news and Trump dumps the market, there's still going to be levels that investors are going to be looking to buy at no matter what is going on because they have automatic execution trigger prices, and those are going to be the dark pool buys because the whole point is those aren't supposed to disturb the chart until usually the next day or the next week in some cases. So it's just one thing to remain cognizant of, and I always do look at dark pools at the end of the day, not necessarily during market hours. Sometimes I will if we're just chopping, because that can set you up for some swings long term. But just a couple things that we do on our Twitch streams daily during live market hours that you guys can start leveraging in your everyday trading. Also, WaveX is like the ultimate. If you're confused about what the flow is telling you, just go look at the aggregate flow on WaveX, because that pretty much will tell you the story of where the market is positioning that stock or ETF or whatever the case might be.
Yep. Intel got some flow near the end of the day that pushed it back into the positive for aggregate flow. So
Nice.
thinking we'll see some sort of announcement from this administration soon.
They have to. I mean, at this point, the only thing that pushes Intel up is an announcement, because people still aren't sold on it, even with the 1 billion partnerships. It's like they're the Bronny James of AI chips right now.
Yep. I mean, it's at a pretty critical line of or this downtrend. If it breaks up above it, I already said we could see $40 pretty quick, and eventually back up toward like 45 or so.
I like that.
Yeah.
I like those price targets, because it's definitely. I mean, I'm not a fan. I still think they need to get some things in house fixed, but
Yeah,
at the end of the day,
you
you
don't like the
can't.
company and what they're doing in terms of their balance sheet and their bottom line, but at the end of the day, if there's hype around it and there's money to be made, it's gonna move.
Exactly.
Right.
That
Okay.
I'm gonna be a silent bear about it, you know. I'm gonna be like I'm gonna
Yeah.
be a bear in San Francisco, very quiet and in the closet.
All right. Um, Tomorrow morning is TSM. They should report overnight, but early in the morning we should see something on that. Like I said, with what I noticed with the flow today, I think we probably see a spike up, but with price probably opening up with within the range and probably below 300 is what I'm saying is going to happen with TSM, unless they do happen to break. It's basically what I would say happened with MU, where MU during their earnings saw a huge run up, and then came right back down and opened up, underneath those levels, ended up dropping below, but then we saw a run up, the days after and the week after. I kind of feel like that's what we're going to see with TSM. The big winner is just going to end up being the market makers. They're going to take the premiums off of it. But we also saw a lot of calls being sold, so I do think that wall at about 300 is going to be there going into tomorrow. I do not have anything else for you guys. Hope you guys enjoyed today's Closing Bell show. Like as always, we will be in here every Wednesday, especially as earnings season gets going. I got to figure out a way where we could probably maybe even broadcast our Discord live streams every now and then for you guys that are not currently in STAX and in our ICC Discord. But if you are interested in getting these tools for yourself, the link is in the description below, investorcentral.com/memberships. You can use eRoo loves STAX for 20% off your STAX membership. And what we are also offering right now for those that sign up is that you can get the access to our Discord, or at least the STAX channels in our Discord, through the app itself. You just have to message me and I'll get that set up for you. For WaveX, it only calculates the days aggregate. Yeah, so you don't know the total aggregate. No, just the days. And keep in
that's
mind,
what you want to know, by the way.
Yeah, you only care about what's happening for the day at this point anyway. Yeah.
If you try to go further out, you will get very confused. It's the same reason why we get questions of, hey, why did we see a big money print after a huge sell-off for puts, even though it looks like it just bottomed out and is now reversing? And it's like, because those are micro hedges against positions from institutional buyers. So them dropping 1.6 million on puts for more potential downside in the next 4 months is just limiting their exposure on their position that they already have, because they most likely own commons within that stock. So they're just essentially playing against the market for protection or they see some kind of catalyst, because one, they're not going to go and get liquidated out of that position, but number two, we're also those are going to be the things that you need to pay attention to. So yeah, aggregate flow, it's only for the day, but to be honest, if we gave you more than the day, it wouldn't really be beneficial.
Yeah, and also keep in mind with the way the market makers work is that once those positions are taken throughout the day, they're constantly delta hedging. They're constantly making sure that their portfolio is balanced in the case that any sort of moves do come. So you got, because if they were to do it later on after prices moved, it's going to very quickly ruin and mess up their balanced and their risk profile. So keep that in mind. That's why what's happening throughout the day, the buys and the sells directly make an effect where price could potentially end up going. And also, real quick, with Wave X, you guys may notice there are times where Wave X shows more data than what our actual flow for that ticker might say. Keep in mind, STAX is actually filtering out what is considered not as aggressive or less important for us to see. So certain prints that are well in the money, certain prints that aren't high enough in premium, well, sometimes they will get filtered out in the STAX flow, but they will show up and be calculated within the aggregate premium for WaveX, and that's just it's just our way to filter out the noise to get you guys what's important in terms of the numbers and what's coming in and out. Okay, that's all I had for you guys today. If you're in our Discord in our STAX software, keep in mind we will be back at it tomorrow. I'm always going to be streaming, usually that last hour before market close, answering questions and helping you guys figure out what's going on. TraderLink and STAX AI Discord going to be merged, or TraderLink members just going to have to join the STAX Discord? As of right now, we're still trying to figure out what's the best way to do it, because again, we are on two very separate systems. Right now, the focus for us is to make sure that our systems and the tools are merged first. So just stay tuned. We will let you guys know whether it is that the system is directly going to have TraderLink members in the STAX AI Discord, or if it's going, we did have talks about keeping it separate at this point, just because TraderLink members tend to be more of day traders and scalpers, while STAX AI tends to be more of those swing traders. But we will let you guys know that we will send out additional information for you guys as soon as those decisions are made. But for now, everything's going to continue running. Nothing's going to get axed, nothing's going to disappear. But again, they do offer two very separate styles of trading, two very different types of traders that use them.
And that's why I started doing the daily streams, by the way. They're more driven for the TraderLink community, because I understand you guys are day traders, so that's why I'll give like very quick levels on SPY, IWM, and other stuff. Obviously, I'm in there for our Investor Central Club members, and that's why we'll find swings as well using our platform. But yeah, just as a FYI, that is one of the reasons why I'm streaming more often during the day, is so TraderLink members can come in and get live levels. We use TraderLink tools to find the pivot points on SPY and that kind of stuff. So just as a FYI about that too.
Yeah. And also, you're asking, the discount for STAX is down below in the description box. eRoo loves STAX will get you 20% off the STAX membership. If you want to join the Discord in particular, you can use the code Lifetime20. That'll get you 20% off on the lifetime subscription for our Discord. All right. If you have anything else, you can always message us. You can always email us if you're not directly in our platforms. Otherwise, you guys can always DM us individually when it comes down to in our Discord or TraderLink and things like that. But if you have questions, help@investorcentralclub.com. If you're just finding us on YouTube, if you have questions on how to get started, how things work, we're always here to help out. Hope you guys enjoyed this today. We will see you guys next week on YouTube, or if you're in our Discord, we'll see you guys tomorrow. Have a great rest of your guys' day. See you guys soon.